Last Friday, S&P Dow Jones Indices announced the latest round of changes to the S&P 500, with 3 new stocks joining the index. And there's nothing more positive for your stock than joining the #1 large-cap benchmark. So many index funds exist to mirror the S&P 500, meaning they'll all be forced to buy the new additions. You get an instant, sometimes gigantic pop. The additions this time, it's AppLovin, the advertising technology platform, Robinhood, the iconic retail trading platform, and Emcor, which is a lower-profile play on construction and energy infrastructure. Now, they're taking the spots currently held by Market Access Holdings, also an electronic trading platform, Caesars Entertainment, the casino company, and Enphase, the solar power play that's been one of the worst performers in the S&P this year. Out with the weak, in with the strong. That's hardly a passive index, right? No matter so many people have swallowed the S&P 500 index Kool-Aid, that getting at it is often a huge thing for a company because so much money has to go into that index. And that's why AppLovin and Robinhood shot up 12 and 16% respectively today, well, even though Emcor is relatively flat. While the changes are technically effective from about 2 weeks from now, prior to the open on September 22nd, buyers tend to front-run that event as soon as they hear the announcement. They don't wait till September 21 or 22. So tonight I want to go over these 3 newcomers. There's this AppLovin and Robinhood are both part of the PARC, PRC cohort. That's our key acronym, along with Palantir and Coinbase, meaning they're some of the hottest stocks in this market. Well, Emcor needs more of an introduction. I had to look it up. I put it through all the different chat services because I didn't know it well enough to come out here. First, AppLovin started out as a platform to help mobile video game developers partner with advertisers. But over time, it's become a larger player in digital advertising. AppLovin came public in the spring of 2021 at $80 per share. Listen to this arc. The stock made it to the low triple digits by late 2021, around the COVID-era peak. Then it pulled back more than 90% from its highs, eventually bottoming at $9 and change near the end of 2022. Who said this market doesn't create bargains? Since then, AppLovin's steadily been working its way back, climbing to a seemingly insane level. Before the S&P announcement, it was at $490. Now it's already in the mid-500s. A year ago, this stock was still in the double digits. So AppLovin's a bit of a wild trader, and certainly not for the faint of heart. But even though the action in the stock's crazy, I've never been able to fully turn against this company because it does have some of the best growth I have ever seen. AppLovin's revenue has nearly doubled over the past 3 years, while its earnings have gone from just under $1 per share in 2023 to $4.50 per share in 2024. Get this, the analysts expected to earn more than $9 per share this year and then $13 and change next year. That is just, wow, that's neck-breaking. Of course, the stock's had a monster run, so it's trading at about 60 times this year's earnings estimates and 41 times next year's numbers. Given AppLovin's turbocharged growth rate, though, the valuation may turn out to be cheap. It's not cheap now. It could be justifiable, though. The thing is, bulls and AppLovin have been betting on the stock getting out of the S&P 500 for a while now. It's finally happened. I expect some selling going forward as people ring the register. If you want to buy this one, you should pay for that weakness to give you a better entry point. I would not go in tomorrow and buy it. Frankly, I don't know enough about advertising technology to explain why AppLovin is so darn good. But it's already jumped from mobile game ads to e-commerce ads, a much larger market. So I think management's earned the benefit of the doubt here. Some people think it's a mini Alphabet. The company doesn't report again until November. Between now and then, I'm betting you'll get a better opportunity to buy this one, as long as you're patient. But it's a buy. Next up, Robinhood. Now, that one needs even less of an introduction. This is the company that reinvented the retail stock brokerage business, and it's been a juggernaut for over the past few years. I am constantly impressed by their ability to expand into new categories, moving from simple stock options and crypto trading into new offerings like retirement accounts with the best deal around, credit cards. Robinhood's always planned to become a full financial services platform for the younger generation. So far, it's pulling off in spectacular fashion. I bet everybody's jealous all over Wall Street about this one. You know, last Friday we checked in with that Alpha 100X, my favorite alternative data platform, and they've heard very positive things about Robinhood from their consumer surveys, especially in crypto trading. These guys are miles ahead of the competition. Young people love that. In the end, what keeps me bullish on Robinhood, despite this remarkable run, is that we're witnessing a gradual transfer of wealth from my baby boom generation to our kids and grandkids. By some estimates, over $100 trillion will be transferred over the next couple of decades. And I figure Robinhood's a major winner. This is a point that I made before this edition in my next book that's coming out at the end of the month, How to Make Money in Any Market. Maybe if you're my age, you use Fidelity or Schwab, your kids are probably more likely to trust Robinhood. It just came out of nowhere, and it's killing it. Again, like AppLovin, you have to have some expectation that there'll be profit-taking in the near future once the stock's added to the S&P, especially since Robinhood now sells for over 70 times next year's earnings. That's expensive, but I view any weakness as a rare buying opportunity. Do you know, I was going to actually push it really hard right here. I said it's probably going to break it because it had a bad head and shoulders pattern, but the pattern meant nothing. It just took right off. Good for them. Finally, let's talk about the one that I think is most attractive here, and it's called Emcor Group. That's all caps. EMCOR. Emcor is an engineering construction contractor, especially for industrial and energy infrastructure. They plan, install, operate, maintain, and protect facility systems. Think electrical, mechanical, lighting, air conditioning, heating, security, fire protection, and power generation. Now, if you're still awake after those sentences, what I'll tell you is that when I looked at Emcor's business, I saw a company that's perfectly on theme for the current moment. The company's part engineering construction firms like a Jacobs or like an AECom because it's involved in the design process, but it also sells and services its own equipment like Cummins, Dover, or Eaton. The last two are part of the Charitable Trust, all of which have been doing very well thanks to the wave of data center construction. Same goes for Emcor, a stock that's nearly tripled since the end of 2023. Will you look at this from some outfit that you probably never heard of? Money. While the overall non-residential construction market's been choppy thanks to higher interest rates in recent years, Emcor's continued to put up strong growth thanks in large part to exposure to the data center, the best growth story out there. And the analysts expect Emcor to keep putting up excellent numbers. Some of that's the data center. Some of it's from the reshoring of semiconductor fabs and pharmaceutical plants driven by the president's tariffs. Basically, if you expect a lot of factories to be built in the United States, well, then I tell you, you should be buying Emcor. Stock currently sells for a meager 23 times next year's earnings estimates, so I'm not concerned about a way of a profit taking here like AppLovin or Robinhood. People are clamoring those two to join the S&P, but no one cared about Emcor. This was just an addition that came completely out of nowhere. You got my permission to buy it right here. It's a very good stock. Emcor, E-M-E. The bottom line, of the three newest members of the S&P 500, AppLovin and Robinhood are both red-hot stocks that have gotten even hotter. I expect them to move higher over time, but they might pull back now that they've gotten a boost. But Emcor, this one's got a lot less hype, and I got to tell you, it's got a very attractive story, which makes it a buy right now. I think we should take some calls, and that's why I want to start with Robert in New York. Robert.
Jim, we haven't spoken in a while because you made me so
what
much
is that?
money on. Well, your other girl had left. The other woman in the office had left. There's another guy there, a real great guy. But here's one of the main reasons why I haven't called in. You've made me so much money since these last couple of months on this next one. It was over $100,000 you made me on this stock since April.
Okay.
You can go to the videotape, okay? So
Yes.
You are a genius. That's all I got to say.
No, I'm not a genius. My wife and my late mom would say, will you just stop? But, yeah, thank you.
Your wife
I've been a little down. I've been a little down, so I need this. I'm a little down.
Well,
It was fantasy related. It was fantasy related, not reality related. So go ahead, help me.
I'm sorry, Jimbo. But, Jim, listen, back in April, you told me to buy this stock. It was in the 30s. Now this baby has almost tripled for me. Over the past year, this company's shares have risen over 120%, especially when the Fed cuts. This company will definitely benefit greatly. You may disagree with me. I think this is a huge winner, and I think it's going higher. Levchin firm.
You're wrong. It's going much higher. And as much as I appreciate your enthusiasm for the stock, Robert, I think that you aren't enthusiastic enough because Max Levchin has it going. People keep underestimating this man. How about $100 by the next time we talk, Robert? That's what I think is going to happen. And I like Robert's enthusiasm. More importantly, he's a gracious man. I thank him. Of the three newest S&P 500 members, I think AppLovin and Robinhood have the most hype. But don't forget about this Emcor. What? That could be a rocket ship. Watch more Mad Money ahead, including my exclusive with the CEO of Kava Group. That's a Mediterranean outfit. Then there's a lot of hand-wringing when it comes to AI and layoffs. But just how big of an issue will this really be? I'm going to give you my take, and it's going to surprise you. And, of course, all your calls, rapid fire, and tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.